Good morning, everybody. Today is March 28, 22 a.m. Eastern Time, FOMC day, right? It's a really important day for risk assets in general. So let's review the market wrap that I posted yesterday to you guys and compare what we have right now. The first one is the volatility skew curve. It's pretty like a bearish smirk. So what the volatility skew is telling us? What will you be profitable? Sell out of the money calls to buy out of the money puts. It's because that we have a bearish skew. But yesterday also show us a bounce Thursday and Friday, right? So per volatility skew suggests us a pullback today and a bounce Thursday and Friday. So let's compare what we have right now regarding volatility skew. Let me put in the screen, give me 1 second. So basically still the same, okay? Of course, the angle from Thursday and Friday now is slightly different. It's kind of more bearish than bullish. But, it's difficult to certify if, we have a bullish or bearish smirk. Looks like much more flat because the implied volatility doesn't, have too much discrepancy between out of the money puts and out of the money calls, okay? But so far, it's still showing us a pullback today, okay? Same thing that what left yesterday. So let's review, okay, let's check like the orders. So 11:26, we saw a delta 0.61 order printed. So break even 51.59.24. It's already in the money, right? It's already profitable, and the delta is spiked 2.96. Okay, so we need to look for this region as a possible support for today, right? 51.59. So regarding the book, since the volatility skew showing us that the profitable thing will be sell out of the money calls and buy out of the money puts. So looks like that some player bought 5,100 and sell 5,200. That was the higher volume. Why I said sorry, my fault. Why in the market wrap, I seated instead of 5,100, I seated 5,120. Because if you check 5,100, we have, a bullish delta flow. So we have bearish delta flow start at 5,120. So because that I highlighted in the market wrap, so it makes sense to me to buy 5,120 and sell 5,200. And also look how crowded it is, 5,200, especially the volume is the biggest volume, okay? I also highlighted over here that a lot of huge volume at 5,108, starting at 5,170, you have like higher volume in call contracts, right? If you compare, the higher levels in put contracts is much lower than call contracts. Consequently, because the volatility skew, we have higher implied volatility in put contracts than in call contracts. So puts tend to be printed, puts tend to be paid off today. So that's the only divergence that we have in the structure, the volatility skew. Everything is bullish. Delta flow is bullish, gamma is bullish. The orders, for example, the Delta 61 order that printed 11:26 yesterday is bullish, right? So because that I told you guys that we need to check 5,159 as a possible floor, as a possible support, and also match, with the higher volume at 5,150, right? Input contracts of 5,150. Is much higher, the volume, not much, like 1,000 contracts higher if you compare with the call. So 5,150, I also put in green, is because, tends to be buyable. right? And I also highlighted who is behind the put orders, dealers or retail. Why I ask that? Because the delta flow is positive. When you sell puts, you generate positive delta flow. Okay? And when you buy call, you also generate positive delta flow. When you sell calls and buy puts, you generate negative delta flow. So somebody sold 5,150. So the X of the question is who is behind, the orders, who bought and who sold. Okay? Consequently, I put as a possible support. Per book and also per gamma, remember that we are in a positive gamma pattern, buy weakness and sell strength. So where is the strength? 5,180, right? Where is the weakness? Per gamma, the weakness start basically at 5,145 or 5,140, because 5,155 is basically no gamma. It's negative, but it's no gamma. And also I was looking for 5,120 because it's the higher negative delta flow by weakness. But if you come down and check the gamma design, they add defense at 5,135. Okay? Could you backtest 5,135? Yes, totally normal. Totally normal. Look that yesterday at the close, we have a lot of regions with negative gamma. 5,170, 5,165, 5,145, and 5,140. And then, back to positive gamma at 5,135. So, per gamma, they had defense at 5,135. Also, per gamma, but now looking deltas, we will see really weakness at 5,120. So, could you backtest 5,120? That's totally normal. Totally normal. The only divergence that you have, the book is bullish, the delta flow is bullish, the gamma is bullish. The only divergence that you have is the volatility skew. Okay? That is the volatility skew. So since you already review all the gamma and all the deltas, okay, let's just check how we are right now. The delta flow, instead of to be bullish, now is became bearish, right? Since start to print negative delta flow. So what we saw yesterday almost is the same. 5,000. I mean, the volatility skew losing, breaking down 5,170, you have like negative delta flow. Puts tend to be paid off. I also put over here this in the market web, right? Volatility skills, printer bearish is milk, Thursday and Friday bounce below 5,170, puts tend to be paid. So, per what you have in the book is also the same, because you have a lot of negative delta at 5,170. That, as soon as you break down 5,170, could you, take yours at least at 5,150. Right? Note that below 70 we have positive gamma between 16, not over here is positive, let's check, 50, 60, 55. So 50, so we have positive delta flow at 5,106, 5,165. So breaking down 70, we need to look per deltas 16, 65. Because you have positive delta. So who bought calls over here need to defend this region. So breaking down, we start to print negative delta. And then the defense at 5,135, because we have again positive delta at 5,135 and 5,125. So remember that yesterday, the book and of course myself highlighted 5,120, right? Because where we start to see really weakness, negative delta flow. So now we need to look for 4,125. But remember, same thing, defense at 5,135. Okay? Look at the minus GX, they put at 5,140. Okay? Main support, 5,150. where puts tend to be paid. As soon you break down 5,170. Breaking down 5,150, so gamma support will be 5,135. But weakness, really weakness at 5,120. But now, per delta, 5,125 will be the delta support instead of 20. So the levels is still the same. Look that the plus GX dropped from 5,225 that was yesterday, 5,225 dropped to 5,215. That's a region that we have been looking for since December. Remember? That's the region that I told you guys that SPX supposed to be back test because is the target of the 3-month, the quarter graphic. Let me put my draws in the screen because you guys have that. So pivot target quarter 5,215. I have been telling you guys about this level since December, right? A lot of people didn't believe when I told you guys, and I was really close to backtest there. And also for today the plus GX was moved 10 points down and is at 5,215. Okay. Anyway, we already review all the levels, so pay attention all the levels that I cited. The only difference that we have between yesterday and pre-markets is the delta flow that became like we can consider no flow because it's too low, but since it's negative, let's put as a bearish flow. And other thing that I also highlighted in the summary is regarding the DIX, right, and the GX. So the pattern that you have been seeing since December, every time that dealers start to add liquidity, we have been seeing red days, right? We have been seeing red days. Why? Because we are in a distribution. Doesn't mean that market will crash, doesn't mean that market will revert. Distribution taking times, and we don't know how long it takes, right? But the most important thing is to identify weakness in the book, right? You guys have been observed that the book have been flipping flop gamma constantly. As soon as you start to flip to a negative gamma, dealers have been killing the bears, bringing markets back to a positive gamma, generating a gamma squeeze. We also have been monitoring during the intraday the zero DTEs and during the intraday the delta 1 orders that have been bringing markets back here. So focus again the DX. So the DX almost jumped like 3% from 42% to 45.7%, and also the GIX jumped almost like $1 billion from 3 point something to 4.6 billion. So markets tended to be unidirectional today. So the decision of the movement, the direction, only will be taken after the J. Powell presentation speech at 2:30. So I don't expect any change in the FOMC. For me, they will keep stable the rates, they will not raise, and they will not cut as well. Especially because the CPI, PPI came higher than people expected, in the previous months. Okay, so I'm not seeing any, motive to cut nowadays, and also to increase as well. So I think it will be the same. So the GIX move up, right? Market tend to be red, as we have been seeing since December. Okay, volatility skew is also saying is that as soon as you break down 5,170, right, puts start to be paid, and the volatility skew has a bearish smirk. So volatility skew and the DIX, the movement of the DIX suggests us a red day. But the flow in general in the gamma design is bullish. So we have divergence. Okay, we have divergence. Also look at the discrepancy that we have in the SPX movement and the DIX. This is what we have been seeing since December, right? So as soon, you open this big mouth, big gap, but you have been realizing that since December. So this is a very good, show you guys that dealers are not willing to buy anymore. Dealers really want to sell high. How high this market goes, we cannot predict because we still have a lot of short sales. And consequently, as much hedge we have, as much short sale we have, as much premium we have in the table. And dealers looking for premium, right? And dealers looking for premium. Guys, anyway, I'm finished by here. Pay attention in the levels. 5,180, I just want to repeat, just to focus. 5,180 is a lot of, volume in call contracts. I mean, start at 5,170, so 5,180 is everybody's position on there, so tend to be the resistance, tend to be rejected. So below 5,170, volatility tends to spike, and consequently, could you see a market back test 5,150? That is the major support. That's the major support. Really weakness only at 5,120 is where we start to print negative delta flow, according to yesterday. Okay, but some delta 61 orders that you saw suggest as a floor at 5,159, 5,160. So we also need to look for 5,160 as a delta support, as I show you guys before at the beginning of this presentation. So 80 resistance, rejection area, 5,170, breaking down, puts start to be paid, volatility tends to spike. First level of support, 5,160, because we have positive delta between 5,160 and 65, and also 5,150 is the major support. And also the delta 61 orders that the break-even is 5,159, right, is in that region where we have positive delta. Okay, breaking down 60-65, we need to look for 5,150 because you have a higher volume input contracts in that level. Break it down 5,150, we have 5,135 as a gamma support. And break it down 5,125, 5,120, 5,125. That's, the worst case scenario for today. Regarding upside, breaking up 5,180, so the GX became a magneto and market could backtest 5,215. That's also the target of the quarter graph pivot. Guys, take care, enjoy your day. Today is funky, play carefully. So the most correct thing to play today is a straddle.